This morning in Your Money, we've been hearing a lot about the tariff trade war going on between the United States and the rest of the world, and there is talk that this could cost the global economy a hefty, pretty decent amount of money. But how will this affect us? Well, this morning we are joined by Jeff Massey, a certified financial planner, professional, and founder of Massey & Associates. Good morning, Jeff.
Good morning.
Welcome back.
Thank you.
Very important topic today. I think those of us that follow the news have been hearing those words, tariff trade war. And right off the bat, we need to know, how does this affect, the stock and bond market? Because so many of us are invested in it.
Oh, sure. And it is a concern that it would implement, once implemented, that the tariffs would impact the stock and bond market. What's kind of interesting is that it's not having the impact that was anticipated. And why would that be? Well, we think that due to the tax plan was one, because companies are more profitable. And when you look at that, there's been a very positive earnings reporting season.
Right.
So, that the company's profit, their bottom line, is still doing well, and it's kind of offsetting the expected impact in the market.
So you say that expected impact is not as sizable as we were to initially believe. In terms of size, can we expect it to be drastically smaller? Is it going to be maybe in between? What can we expect?
The impact in the market? My crystal ball's in the closet because nobody really knows what that's going to be. It really depends on the size of what ultimately is implemented on the tariffs, because a lot of things have been thrown out there, but not everything has been implemented. So it depends on the size.
And let's talk the results of the tariff and whether or not they are going to cause inflation, and really what our viewers can do in terms of protecting themselves in the wake of something like this.
So the question is, inflation, will a tariff impact inflation? Absolutely, it can do that. And why? Well, if all of a sudden the cost of goods go up, well, then the producer is likely going to raise their prices to the end user. So it was just in the Wall Street Journal, Whirlpool was all excited about the tariffs. Well, then all of a sudden they implemented, they did a restriction on washing machines, and then they implemented oil and aluminum and steel tariffs.
Right.
Well, now all of a sudden their stock's down 15%.
Right.
Because it's impacting their bottom line.
Do we need to position our investments accordingly? Well,
it's important to do that. And the worst place to be, in my opinion, would be the bond market. Because with inflation, interest rates go up, bond values come down. Right. So we like bond alternatives because they make a lot more sense to the end user. And when you look at the size of the market, we export to China about 130 billion. We import 506.
Right.
So
yeah, so many important things to be mindful of.
Right.
Thanks for breaking it down,
Brandon.
Jeff. We appreciate it as always.
Yeah.
If you would like even more information from Jeff, just visit our website, roadshow.com.